All right. So for today, April, what is it? The 3rd already? Call of the day. Sometimes a trade, sometimes a real time call, sometimes both. This was slightly before 9 Central. We were looking at a couple things. We were looking at, first of all, how many rotations could a market go to a certain area and hold it? Throw that one in. Throw this one. This is the S&P before 9 Central. All this happened after. But look at all these rotations. If I draw a line across, let's clear them and draw them again. You draw all these rotations. How many times do you think a market's going to just keep rejecting? At some point, it's going to break out. And the whole dynamic behind it is people sell a market after it already went down. They buy a market already after it goes up. That's what retail people do. Another thing they do is after they see support hold, then they play support. They don't anticipate an area being support, but after they see it be support a bunch of times, they're like, oh, I'm going to buy it here. Look how many times it worked. It must be support. No, it already worked a bunch of times. The more it works, the less it's going to work. And that's this dynamic in here. So there's always already a bearish bias coming down into that area at the time around 80 even. And the qualifier, because it's not enough just to sell it necessarily, but let me blow back the footprint up, play it. Here's the qualifier when you see some buying that can't get the market to go up. Okay, and so a couple minutes before 8, you see it right there. You see the green in the bottom right hand that just came in. Now there's a fight, 850 and 80-50 and 80 quarter. 80-50, some selling is trying to hit the market. 80 quarters is a buy imbalance that obviously could have buying stuck. I'll play it again. And as soon as we get, let me actually slow down the replay. As soon as we get through 80 quarters, you combine what I just went over with how many times you think this 80 even area is going to hold. At some point, the longs that keep thinking it's going to hold or buy it here are going to puke it. And longs in trouble is the selling you need to go down. And you could see as soon as I paused it, as soon as I got through this 80 quarter, it went down pretty fast, 5 or 6 ticks. So there was a number at 9 o'clock that was bearish that helped sell it even more. So I'm not going to take credit for the entire move to 75, but there was definitely a head start of a couple points before that number came out. The number was ISM non-manufacturing. If you were in this trade, that's the only time I advocate holding a trade through numbers. If you got enough money built into a certain part of the trade, you paid for it, and then it's risky because you want the number to go your direction. But if you have a head start and you've already made money on the trade, it's the only time I would say hold it for the number to come out in your direction. I would never advocate people to hold their entire position, hoping the number comes in the direction of your bias or your position, your trade. But if you already paid for the trade, you got a small piece left, and you got a head start, then you could take a shot. But it came in pretty weak, and it pretty much moved the market right where it wanted to go anyways. Then there was a rally that came back later on that, you know what, I might as well show since we're doing it. Let me speed this up. The market goes down to 75, and there's some targets down there with the heat map. You could see it blue and everything. But then it comes and retests the 75, which is doing now. And here is the key. The rally that we have pretty quickly right through here in the ES shows you potential rejection, but that's just not enough. You also got a couple another relationship. And so when you see I stopped it, when you see this rejection, this quick move back up from the lows, it's just a chance that you might have rejection or the low might be in. It's a probability. There is no for sure about it. Don't ever let anybody tell you this has got to happen, because there's no exactness. But you couple that quick rejection with the fact the NASDAQ went through a big area. So the same thing, only opposite. I paused it. You see all these rotations. See how many times you think this line is going to hold, and it finally breaks out. But remember, looking at another market helps you understand that. So let's shrink down that chart and open up the NASDAQ. Here's what the NASDAQ did at the same time. They went up, and I told people in the room live that you guys seen this congestion box. What was important in here? The price was 62 even. If they get through 62, they could rally. Now, I'm not saying it's going to rally all the way up to 76.10. I don't make those calls that long, but you put yourself on the right side of the market, and then you're in position to catch moves that are a little bit protracted than you thought. But this was key. When it got through 62 and did this, it helped pull up the ES and then define that the bottom might be in, and playing it from the short side is the wrong side. And we even said, nobody, I don't know how many people might be long, but nobody in the room should have been short for any of that with that kind of analysis. Again, subscribe, comment. We'll see you in the next video.